The information provided in this podcast is for general information purposes only and should not be considered as personal advice. Always consult with a qualified professional or expert in the relevant field for personalised advice tailored to your specific situation.
If you rewind 15 years ago, this was a small industry and consumer protections through the introduction of NCCP was sort of front of mind. Then you fast forward and you've got an industry which is the first choice for Australians. Our role now as an association, in addition to informing government and Treasury around policy settings that are good for industry, is actually to say this industry brings true choice, true competition. We need to be very careful to preserve, but also to enhance that competition, because if we don't, it's to the detriment of consumers.
Hello, everyone, and welcome to another episode of The Wealth Guide, sponsored by Ryker Capital. Very excited today. Today, we're going to hear from the source. And what do I mean by that? We're going to unpack and understand what happened in 2023 for our brokers, broker partners, broker businesses, and clients that they worked with. In addition, what's happening in 2024 and what can we expect over the next couple of months as well. So to unpack and dive into this, we have a very special guest today, Anja Pannek, CEO of the MFAA, which stands for Mortgage and Finance Association of Australia. Welcome, Anja.
Thank you. It's fantastic to be here.
Very pleased you could make time to join us. Also on the couch today, who do we have? Principal and Senior Advisor, Mr. Ray Redgme.
Thank you, Tamara. Super excited to have Anja here. Work with a lot of brokers, so really excited about today's podcast and see what we can unpack today.
I'm very excited as well. Also on the couch, another Senior Advisor at Ryker Capital, Mr. Dean Dasuki. Hi, Dean.
Oh, hi, Tamara. Good morning.
Very exciting episode. We have Anja for 2 episodes. So if you're tuning into this one, and I'm sure you're going to like what you hear, stay tuned for the second episode as well. I might just start off really getting to know you a bit more, Anja, if that's all right. Wanting to, I guess, get a bit of an understanding about your career, your path to being CEO of the MFAA.
Sure. So I'm actually a chartered accountant by trade. Please don't hold that against me. Okay. I started in one of the sort of big 4 professional services firms and soon found out, I just had a passion for working in financial services. So I, over the course of my career, I've worked in investment banking. I've actually worked in funds management. I worked as CFO of one of Australia's largest non-bank lenders just prior to the GFC. And they're all sort of been in accounting, finance roles. And then I had the opportunity after a number of different roles to become CFO of NAB's consumer bank, their personal banking division, which was a really broad part of, one of the major banks in Australia. It was digital direct, all of their broking divisions, small business, marketing for the entire enterprise, 9,000 staff, all their retail branches as well. Yeah. So it was a really big and complex business, and I just love that type of environment. From there, I went on I did just a complete career change and became CEO of an aggregation group called Plan Australia. And for all the brokers listening on the call, they'll know, so an aggregator facilitates a lot of the things a broker has to deliver for their clients. And, over that experience, and this is something that will resonate with people on the call, is, I lived through ASIC's broker REM review of industry. I lived through the Royal Commission with broker members. And so I've got the same shared experience of many people in industry having lived through that and seen the regulatory reform implemented. And, this industry, the mortgage broking industry, just go from strength to strength. So I think, the sort of combination of CFO, love my numbers, CEO, and really deep industry experience. Yeah. So when the opportunity came up for this role, it was too good not to actually, to step into and apply for. And luckily I was fortunate and I got the role, and, fast forward, it's a year and a half later.
Yeah,
wonderful.
That's amazing. Yeah. As you say, deep industry experience is what you've had, which is so exciting, and really appreciate you going through all that. So with that deep industry experience and where you are now, a year and a half in, what do you feel like is your focus or passion, if that's a better word, right now in your career and with the role that you have?
I think I've had this sentiment about the broking industry for a very long time. I just have the deepest respect for the role that brokers play with their clients. I've had this actually happen to me personally, and I've heard so many stories about it. Brokers, when they work with their clients, they change their lives. I mean, this happened to me. I was trying to decide, what state I was going to live in, what I was going to do next with my life. And it was actually a conversation and how I went about, choosing a mortgage for that or financing that actually changed the directory of my life. And I think that's always sort of stuck with me, the respect that I have for brokers. So when I couple that with the role that I have at the moment, something like 70%, north of 70% of mortgages in Australia are facilitated by mortgage brokers, something like 4 in 10 small business loans based on the research we do at the MFAA.
Yeah.
What I want to see is a time, and I don't think it's too far away
Okay.
as well, where the first thing you do as an Australian is you seek out the services of a mortgage broker in making the really, really big decisions in your life. I just think, that expert guidance, that help making those big decisions, your family home, building property, building wealth through property, that's really, really important overall. Yep. And I think we're fast on the way to that. I think for a long time people have referred to the broker industry as the third party industry. I think this is something we've heard of.
Sure.
But I think with where we're at the moment and where we're going to be, this isn't the third party. This is the first party.
Exactly.
This is the first choice for Australians, trying to understand their needs when it comes to mortgages or
and
debt.
we're seeing quite a bit of that. And we are seeing clients being educated to not go directly to the banks. They're going, well, look, what's in their best interest? We'll go to the brokers and they'll let us know which banks are going to give us the best deal and who's going to be the best suited to our financial situation. So, absolutely. We're seeing quite a bit of that in our side of the business as well.
Yeah, I think just there's a complexity in the lending market that, we live in financial services, but it's not... It's a lot harder, for the vast majority of Australians, and that's why they seek out the services of experts.
Yeah,
100%. It's a big part of it.
And I think you're right. I think that's probably the first time people seek professional advice often is going to get that credit advice going to a broker. And then it kind of snowballs from there. So it's very, very crucial too. I've actually only gone to a broker. So I'm going to put my hand up. I've never actually gone direct. So I've used a couple of different brokers over the years and I've never gone direct, and always really, really, and it is life-changing. There's so many synergies. I'm not going to jump ahead. A lot of synergies between that and financial planning, but that's very...
100%.
Maybe let's go into the MFAA. So for people who are watching, and we do obviously have a lot of mortgage brokers, we have a lot of clients. What is the MFAA?
So we're the peak industry body for mortgage and finance brokers in Australia. We've got north of 15,000 members, and the vast majority of those, 97, 98%, are actually brokers.
Yeah.
So brokers become members of the association and we are their voice. We're a very small team. Our key role is around how we become the voice of our brokers, how we advocate for regulatory change and policy settings that make sense, how we educate and provide professional development to continually address standards in industry, which is very important in an industry such as ours, where trust is a key element of the relationship between a broker and their client. And then what we also do, a big part of what we do is also promotion, and that's getting messages across to consumers around why you should go and see an MFAA accredited broker as well. So, just a few more things in terms of maybe the approach we take. We've got an independent board. I report to an independent board of brokers and directors as well.
Wonderful.
We're really keen on transparency and accountability in what we do. So overall, and we've been very successful as an industry association. And then I just want to highlight this to demonstrate the work that we do and is really to engender trust. So we're very much focused on why is the industry so important to consumers.
I was just going to ask you that. So we have, as an end consumer, how does that tie into what do you do to give me the trust, the confidence in that broking industry?
Yeah, absolutely. So we have, very clear standards, membership criteria, continuing education criteria, a code of conduct as well. And all our members are bound by that code of conduct, an independent tribunal as well, all of which adds to improving standards at the individual level. What we've also done is really ensured that there are policy settings to provide consumer protections and advocated for those. Obviously, the introduction of things like best interest duty, which was actually in the DNA of the industry already, but we worked very closely in terms of having that regulation embedded across industry, other elements of consumer protection as well, which, you know, you just need to know as a consumer are there around reference checking, breach reporting. How do we know that it's working? So what we do is we track metrics, lead and lag metrics, and this forms the basis of conversations we have with government, with Treasury, with ASIC, with all the key stakeholders. AFCA's the ombudsman, the financial services ombudsman in Australia.
And we're aware of that from a financial planning industry point of view.
So we engage regularly with AFCA, and what we know from AFCA is that less than half a percent of all complaints in AFCA relate to mortgage brokers.
Wow.
So it is tiny.
Yes.
And you think about the industry's gone through significant regulatory reform, best interest duty, responsible lending. And if anything, you know, those very low complaints, very low sort of internal IDR, internal dispute resolution complaints, low EDR, and significant increases in market share. This is an industry that's doing great things for consumers.
Wonderful.
So, which is a credit to all the brokers that are out there as well.
Well, and I know when you bring that up before, because I also lived through that, the Royal Commission and all the compliance stuff too. And really, I think it's so important about the advocacy, because I think there was, from potentially the media inadvertently, you could get the perception that there was an issue as far as complaints prior to that with regards to the broking service. And that really wasn't the case, was it?
It wasn't at all. No. It wasn't at all. I spoke about best interest duty being in the DNA of what mortgage brokers do. This is a very client-centric industry. And I think what we've had over the last few years is, you know, regulation embedded, best interest duty brought to life, many other consumer protections, and this increasing trust is demonstrated by market share. I think market share around the time best interest duty was introduced, mortgage broker market share was around 60%. It's now north of 70%. Like, the numbers just tell the story.
Exactly.
And broking is largely a referral business. You know, I like my broker, I refer my broker to my friends and family, and then we've just seen that sort of eventuate as well. So it's a great, as you can tell, I'm really passionate about it.
I am picking that up, and I can see why. Now, Dean, you would be working with a lot of mortgage brokers that are members of the MFAA. Is that right?
Correct, yeah. So we work with a massive broad range of brokers, and like you're saying, it definitely is a relationship type of business as well. So, and one of the things that I really find very powerful, especially on the broker relationship, is the fact that clients actually have choice. They don't have to go to a bank and just they're stuck to the one set of rates and lending criteria, but they can go in there, depending on their circumstances, the broker can help them get to a loan based on their lending needs and things like that. So it's pretty good. So.
Just out of curiosity, Anja, who is your mortgage broker? I'd love to work with him.
We can't name names on this podcast now. We won't edit it out.
I've actually made a note to talk about him, so stay tuned.
That's a good segue.
Yeah, so stay tuned.
No, that sounds good. Have you noticed an evolution of the association? Anything that you can kind of call out to go, look at these, this is how it has evolved, and now this is really where we're at right now as far as the system?
So I think the association has absolutely evolved. It's evolved in context of how the industry's evolved. You know, if you rewind, 15 years ago, this was a small industry, and consumer protections through the introduction of NCCP were sort of front of mind. Then you fast forward and you've got an industry which is the first choice for Australians, as I said a few moments ago. So our role now as an association, in addition to ensuring, informing government and Treasury around policy settings that are good for industry, is actually to say this industry brings true choice, true competition.
Exactly.
And I think we need to be very careful to preserve, but also to enhance that competition, because if we don't, it's to the detriment of consumers.
Exactly.
Like the broker industry is a force to be reckoned with. It contributes significantly to economic growth through access to lending, and that is for both consumers and business owners as well. So I think as an association, what we've done is we've really turned our mind to what that looks like. The association was absolutely instrumental in terms of defending the industry. Post, throughout the Royal Commission, post-Royal Commission, embedding regulation, but then also informing Treasury and government to say the industry is doing well. You don't need to undertake the proposed 2022 review of remuneration.
Exactly.
Yeah.
Because look how good those sort of quality outcomes are. So I think we've adjusted and adapted to ensure that the conversations we're having with government are relevant. I think data-led is also very important. We're a very large, we put a lot of focus on data as an association because data and facts don't lie.
Yeah.
And part of my philosophy, and I think of my predecessors as well, is that we come with solutions. We come with solutions for how the industry, our members, can work in the lending environment with aggregators and other suppliers for the benefit of consumers. Like, you've got to come with solutions as well. And I think, we've seen a number of successes in terms of that in recent years around cancellation of the remuneration review, reference checking, defence of the industry, just to name a number of things.
Wonderful.
As well.
Okay.
That's fine. Now let's go back to 2023. We're not going to dwell on it, but what a year last year was.
I know, but before we go there.
Okay.
I've got a question for Anja. I wanted to ask, look, obviously the numbers that we sort of spoke about, that almost about 70% of lending is ever so increasing, it is staggering numbers. How do banks in particular feel about this? Not to name the name banks, but some of them weren't quite as impressed with some of these numbers, or not so impressed, but they want to grab a better market share internally.
It is. I mean, lending's a competitive market. There are lenders in market where predominant, I'm talking like 99%, 95% of their mortgage originations, and north of 50 of their business originations are through the broker channel as well. I've got a saying around this is, I think, Australians and consumers are choosing where they want service. Dean, you spoke about the broker proposition actually offers choice. It's a complex lending market. I'm sure we'll turn our conversation soon to the economic environment and what that means, but it's become more complex over the last year and a half for the ordinary consumer. And what do you do? I think that proposition's playing forward. Our call, and we've called this out in a number of different submissions in my appearance at a Senate inquiry late last year, is what we want to see lenders do is continuing to invest in technology and resources for the broker channel.
Wonderful.
Because at the end of the day, never guess what, that's what consumers want.
Exactly.
And we're for consumers having choice overall. And like I said, I think, 70%, I think it's a low watermark for where this industry is going to go. I think we'll see some different behaviours from different lenders. And in a defensive move, as you would see in a dynamic and competitive market as well. I think we'll see that play out, but
we'll see.
70, 80, we'll see where we go.
Okay, wonderful.
Stay tuned on that one for next year and the year after. Let's dive into 2023. What a crazy year that was last year. I wouldn't mind hearing from you, first of all, Anja, and I know that Dean and Ray will weigh in with your experience with the broker partners. How did the broking business, the members, and how did clients, what was that year like? I mean, lots of strain. I'm just thinking a year ago, March 2023, it looked and felt a whole lot different than it does this March.
So I think 2023 was probably, it was absolutely characterised by refinances, the fixed rate expiry, the fixed rate wave. We saw levels of refinancing we've never seen in this country before. And that was all predicated off that ultra low funding that was provided to lenders during COVID, which was something none of us ever imagined. Then I think what we saw is lenders effectively knowing so many customers. Typically customers stay in their mortgages for, on average, like you get averages, so it's somewhere between 4 and 6 years, depending on what the interest rate cycle's like. Suddenly you had 800,000 borrowers that were all expiring within a 12-month period. We saw massive market share competition overall, cashbacks. And I know that's something our members were, they just saw and really felt the pain from cashbacks causing churn.
Clawbacks, and that was
just as a result of what, effectively lenders scrapping over market share. And what I was saying a year ago was, hold on a second, the numbers on this don't stack up. Mortgage margins are going to be under pressure.
Yeah.
Fast forward a year, I think if you're reading all the lender results, what are they saying?
Yeah.
Absolutely. So I think all of those factors, coupled with unprecedented levels of interest rate increases, an economic environment no one would have imagined, inflation.
Yes.
And by the way, what wasn't supposed to happen, but did, according to the economic textbooks, which was property prices.
Go up.
So I think there's been some reporting by CoreLogic in the last couple of days that property prices are now 30% higher than what they were pre-COVID.
Amazing.
Yeah.
So the dynamics in terms of economic fundamentals haven't played out. But I think across all of that, we saw extreme activity from our members were really under the pump in terms of meeting customer needs. I don't know if that level of activity was sustainable. I've got to admit, it was at a really, really heightened level. What it also meant, in addition to, I think, lenders wanting to fight for market share, it gave brokers a real opportunity to engage with customers, help them understand, what do I do if I need to refinance? What happens when I come off my fixed rate? How do I get refinance fit? So I think the level of engagement that happened during that period and client conversations, getting their clients ready and then helping them refinance or getting refinance fit when they're able to, especially if they're mortgage prisoners, was just a huge part of that activity overall. And the reason we also know this, we conducted refinancing and mortgage stress survey sort of midway through last year, and what was amazing is 95% of those respondents reported, so this is brokers, reported they had clients seeing them for the very first time to refinance.
Wow. Okay.
So you see my 80% is sort of predicated on some mass, 80% market share. I think we're getting these lead indicators. More people are going, what do I do? I've got to see my
What
broker.
did you find, Ray, through
Look, I think
brokers?
during that time, it was more stressful for the brokers. It was mostly surfaced around clawbacks and the mortgage prison. So clawbacks were, and we look, obviously, with some of the mortgage firms that we work with, we helped out as much as we could because there was a massive relationship piece entwined between the brokers and the advisors. So any client that they would have serviced, we would have serviced, and we would do a lot of hand-holding process. Consumers were under a lot of stress and they wanted to go, well, how do I save a bit of money here on my mortgage? This bank is offering me another $3,500 to refinance. Maybe I should go and do that. But how does that affect me in long term in terms of my credit rating and every other factor of part of the equation? So we sort of did a lot of hand holding alongside the mortgage brokers and sort of helped the customers through. Another one was the prison mortgage where they're sort of locked into the high rate, but also some of these clients were luckily in a transition to retirement age, where they had this additional level of income that they could draw out from the super. So they not only had the income from the super, but also personal income, which allowed them to refinance. Because if not, they would have just got stuck in this high interest rate, which they could not get out of.
So really it was the interplay, because I know that, Dean, you and I were talking about it. You did a lot, because you were talking about, Anja, the mortgage broker is really doing the hand-holding, a lot of education, a lot of understanding. And then you were talking about how, same with Ray, is that the broker and you, if you're working with a mutual client, you had to sing from the same hymn book.
Correct.
How did you actually support the client? Meetings, joint meetings, making sure the process was tight. So there was clear communication.
Correct. Look, I think one of the biggest things that we've seen was everyone was coming off those fluffy, nice, relaxing 1.992% interest rates. And so people were starting to panic, right? So given their income hasn't really increased too much, but then obviously now the mortgage repayments increased drastically. So a lot of people were in panic. So it was good with a relationship both with myself as the advisor and the mortgage broker holding the client's hand and saying, look, it's going to be okay. Let's help you. Let's get on the forefront and give you some options to put you in the best possible position, which pretty much was a lot of the biggest theme that we saw last year. So.
But not only that, a lot of cash flow management. So we sat down with clients doing budgeting, cash flow management to go, look, these are some of the items. How about we sort of work through some of these cash flow areas to help you sort of see through this tough period of time. And it worked well. And when we sort of work with the mortgage broker hand in hand, we sort of drive a lot of that sort of pain and anxiety from the client to go, well, it's going to be all right. It's going to
really, well. And to your point, because obviously you have the mortgage, the property strategy, and there's other strategies that are in play, right?
Yeah.
So it's kind of like, how are we rejigging all these other strategies to get these outcomes?
And you sort of move those pieces of puzzle to sort of how does this suit the best to the client, and they can take advantage of some of these strategies to help them out.
I'm glad that year's behind us.
Yes.
I know that, Anja, you just have gotten off the back of, and I think it was through a couple of weeks in February, I was following you, I won't say stalking on LinkedIn.
Yes, he did stalk them.
Okay, a little bit. I am a bit of a fan. What I noticed is that you went around the ground. So I think you visited, if not all, most of the states, and you were doing member breakfasts in February. Is that right?
Yeah, that's right.
Yeah.
We kicked off the year with a digital PD day, just sort of setting the tone, what we saw in terms of the year ahead, and then used the opportunity in the subsequent 2 weeks. That was a bit of a whistle-stop tour. I was a bit tired after that, but it was just great to get out and get a sense for what was happening right across the country. Many of our members, just fresh back to work, what sort of inquiry levels were they dealing with? What was the feel on the ground? And that, that's critical for us because it informs where we see pressure points.
Yeah.
The Treasury, asset government, they come to us, they want to understand what's happening really at the grassroots level. So yeah, unsurprisingly, I think what it highlighted is something that we already know, that we don't live in a single speed economy in Australia. We live in a multi-speed economy, and the sentiment, both client, property activity, lending activity varies across the country.
Across the country. No, I was wondering, did you have specific messaging in these breakfasts that you wanted to make sure to get out consistently across the country?
Yeah, so I think the first thing is just, if we look at an aggregate, the industry is in very good shape in terms of the great customer outcomes it's driving, more consumers. So for people to take confidence in that, also for people to take confidence that we're really leaning into where our members see issues and challenges and the types of things we're looking for improvement on. If that's elements around the remuneration structure, if that's friction in the home loan process as well, things like getting the home loan price inquiry on the table with the federal government last year. Because at the end of the day, things that make our members' lives more difficult make the client's life more difficult.
Exactly.
And so how do we actually step into that from a policy and legal perspective? I think some of the common themes, and this is not too different to what we saw last year, that I heard as well, is that serviceability and borrowing capacity is a significant issue.
Yeah.
Now, we've got the 3% buffer, APRA's buffer for a reason. APRA is, and I think, quite prudently, looking at the state of the financial system and sort of managing that, but it is causing pressure. We spoke briefly about mortgage prisoners just a few moments ago. I think there is a fair amount of financial stress in the system, but it is not everywhere.
Yeah.
It's really interesting. Like you sort of, in some places I went to, I'd speak to some members who said they were really concerned about their clients and they were exhibiting financial stress. Others, there was none.
Yeah.
So we're getting sort of localised stress
Sure.
and a sort of slight uptick in mortgage stress overall. There is still a huge amount of opportunity. There are more clients still to come off their fixed rates. I think it's north of another 400,000 this year as well.
Oh, wow.
I didn't realise that.
Yeah.
There was
Yeah.
still, okay.
That's
That's not really out in the media that much. That is.
I think that is still to come. And I think obviously what's happened is we don't have the same level of competition in the market, those sort of enticing, crazy cashbacks. But there are many clients who probably haven't looked at what their position is with their mortgage.
Yeah.
Sure.
If their broker's been contacting them proactively, and I know many of our members do, they'd be going, okay, what can I do for you? You don't always need to refinance. I can sharpen your rate. So there's a huge opportunity in that, maintaining contact, understanding where the client is. And I think the other thing we're seeing is, and I know this sounds crazy with all the sort of economic dynamic going on, is that actually the pause in interest rate is meaning that borrower sentiment for a lot of people is, I'm going to get in. I've actually adjusted my expectations in terms of what I want to buy based on my borrowing capacity. If I don't get in now, what's going to happen is I think once interest rates start to moderate or decline, people are concerned they're going to start to miss out on the market.
Yeah.
Sure.
So a lot of approvals in principle in the system and people wanting to get out there. And I think we're seeing that in some of the auction clearance rates across the country.
Yeah, so
as
that
well.
FOMO sort of has kicked in a little bit,
I think
reckon.
it has, that given the market's moved, 20-30% in the last few years, people want to get in overall, pleasingly we also see both state and federal governments looking at, trying to help people get into the home loan market as well.
Which again, I'm thinking how it's going to sort of drive the inflation market, and then obviously follow on from that to the Reserve Bank, and are they going to then increase the rate? So there's a lot of sort of flow on effect in that part of the process.
Yeah,
definitely. So, yeah.
Well, I was going to say, we're getting a lot of, I think, clients coming in where you've got an older generation and then the younger generation is having a hard time getting in as well. And so that really is, part of, I'm sure, what brokers are sensing, and that kind of bleeds into how we're managing it with a financial advisor.
Bank of mum and dad.
Bank of mum and dad.
Lots of bank and mum and dad.
Planning and all of that stuff, for sure. Okay. How about, can we just dive into maybe some of that localized kind of, are you finding things are varying from state to state, or what is your general feel of that from your breakfasts?
Yeah, so I think maybe just with what seems to be consistent. We've got a supply side issue when it comes to housing in Australia.
Yes.
And that's exacerbated through immigration. It's exacerbated through just not having enough people and production costs, although they're moderating when it comes to housing. Not enough supply, high demand, and the demand's also driven by immigration. The extent to which that's flowing through to movement in stock and demand for financing, I think it's sort of varying. I think, judging from what I heard, there's some states like South Australia where properties are being sold almost before they're going on the market.
Wow.
And that's really being reflected in the house prices as well over there. In Perth, I think that's a similar sentiment as well. And also in Brisbane, like I am from Brisbane, so obviously follow the Brisbane sort of market very, very closely overall. Think about WA and Brisbane, they're markets that were largely static from a property perspective for a long period of time, and have really, I'd say, come into their own. A lot of demand, people wanting to move there. We've actually got a lot of brokers moving to Queensland as well.
Oh, wow.
Because it's a great place, lots of clients, all the rest. I think Melbourne probably still has a little bit of the COVID hangover as well. And some of the sentiment around, just build or renovate versus buy an established property. That isn't only just in Melbourne, but I think it's in a number of other states as well. The complexity of renovating or building at the moment means that we're almost, what we heard, we're seeing almost a greater demand for established properties. Then I'm going to take the rundown worst house in the best street
and renovate it.
And put it. But I think overall, stand back, there is lots of opportunities for brokers, and I think consumers, again, they just want options. They want to know what's going to be in my best interest.
Exactly.
Working with their broker from a debt perspective to actually bring that dream to life.
Now, I was going to say, you work with brokers up and down the Eastern Seaboard. Is that kind of reflective of what?
Pretty much
saying?
exactly. But I think looking at 2024, I think the brokers are sort of starting to concentrate not only on a variety of different spaces. Now they're sort of trying to work on creating a customer experience. Now, having that, what I mean by that is they might be working with perhaps builders or with certain building organisations that can sort of provide the customer with that kind of
agents, I suppose.
Or buyers agents, exactly, to provide that experience. I mean, like most of the time we work with brokers to enhance that experience. So when they come to us, we'll go, well, okay, what does that look like, Ray, in terms of tax planning?
Oh, of course. Well,
What does that look like in terms of if things go pear-shaped, what are we going to claim on? What insurances do we have? And then we'll sort of align those services, work with buyer's agent, building construction guys, and sort of provide a sort of holistic approach to the client's situation.
Which kind of ties into what you were saying previously, is giving the consumer choices. These are what your choices are. Which one suits you the best? And what are all the additional things that you have to think about if you're going down this path?
Exactly.
To make sure it's going to be
because consumers got need for those services anyway. So whether we provide those services or they will go look for it somewhere else.
But the other thing as well, onto that as well, when you're looking after a client, when everyone's on the same page and basically everyone's together holding their hands and helping the client together, it actually drives a better outcome. And it's such a better customer experience. The customer doesn't have to turn around and say, okay, we'll give this information to that person and that person. So it's all under the one thing, as it's just a seamless process.
The client feels nurtured, I think, and that's the main thing. The clients don't have to sort of go, I've repeated that information to my mortgage broker, no, Ray, I've got to say the same thing to you. It doesn't need to happen. And we sort of has this flow of information would just go, well, okay, Mr. Client, we can add value here, here, and here for you. Yeah.
It's interesting, isn't it? Because as an individual, like, you don't sort of compartmentalize your financial life.
No.
You don't.
So I think having that sort of experience where you can go to experts and actually just know that you don't need to go, hold on, and pass things off, I think is really important. That's a really great client experience. And I've seen that work very successfully in broking and working with affiliated business partners as well.
Definitely.
Wonderful.
Now, before we close today, maybe picking your brains, Anja, what are the next steps for the association in 2024? What is after the breakfast, what are your kind of highlights for the year that you've planned?
So we, obviously, a significant part of what we do is around advocacy and working with government and at state and federal level. So we've got a raft of regulatory reforms and policy positions we're really pushing into. And they cover things like ensuring that competition in the home loan sector that brokers bring is enhanced and preserved, ensuring that regulation is fit for purpose. And I know that sounds funny, but sometimes regulation can be really effective and help consumer outcomes, and sometimes it can be counterintuitive. So how we face into things like that, one of the things we're looking at is opportunities to improve the amount of documents that brokers hold, because we know cybersecurity is a big issue.
Definitely.
In Australia, and for industry, just ensuring that everyone's on top of their game. That's another key area for us around cybersecurity scams. And then we're also taking some bets on the future, which I'm very excited about.
I'm excited too. What are these bets?
So net zero is something which, it's not just Australia, but I think, all major advanced economies are facing into. The broking industry's got a major role to play, because when someone has a home and they go and see their broker, it's a moment of truth. So we're working as part of a federal initiative to identify how our brokers can be upskilled to identify what those conversations need to be in 2025, because in 2025, every major established residential property in Australia has the opportunity to be energy rated. And that's going to unlock further needs for clients. That's one. The other thing we're heavily involved in is the FSO, Future Skills Organisation. How do we continue to bring talent into this into this industry? What are the skills that are required for a future world around digital for brokers? How do we continue to attract talent? So they're really big things for us this year. Now, that's just two things. There'll be a heap of different things that will sort of come up over the course of the year. We've got our national conference in July in Melbourne. It's called Hello Future, and I think that gives you a sense of what we're focused on as well. Where is the opportunity in the future with technology, with AI, and how this industry is going to continue to thrive and grow going forward.
That is amazing. Thank you so much. I really appreciate it. I think that we've lived up to what I positioned it at the beginning, really hearing from ground zero and the source. And thank you very much for that invaluable information and the discussion today. Thanks, Anja.
Thank you, Anja.
Thanks, Tamara.
Thanks, Dean.
Thanks, Rick. Thanks, Dean. Thank you.